Welcome to episode 74 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week we bring one stock, one headline, and one reason investors should care.
This week, as major wars in Iran, Ukraine, and Palestine rage on, U.S. tariffs reshape international alliances, and China maintains a stranglehold on the critical minerals market, it can be difficult for investors to remember that hundreds of publicly traded companies are continuing to generate shareholder value through the chaos, many on an exponential basis, making it a good time to take a deep dive into a pair of prospective names. John starts us off with a microcap garnering market share at the intersection of AI and defense.
Trevor, what if a small Canadian tech company was helping to redefine how drones and defense systems operate in environments where GPS doesn't work, and investors are only just starting to take notice? Let's take a closer look at SPARC AI, CSE ticker symbol SPAI, market cap of just under 100 million Canadian. This company has grown a lot in a short time and looks to spread its reach.
So SPARC sounds like a company that juggles a lot of industries and opportunities. Would you agree?
Oh, very much so, Trevor. And that has led to a busy summer for the team. So let's have a quick rundown of what they've been up to. Now, let's start in Ukraine, like you mentioned, an active war front where warfare is advancing rapidly. SPARC is partnering with defense advisor CFC Defense, which will help connect the company with military users, drone manufacturers, and government stakeholders. The goal is to accelerate testing, integration, and deployment of SPARC AI's Overwatch GPS-independent targeting platform across Ukraine's defense technology ecosystem. We also have an interview that goes into more detail on this over on Stockhouse with The Watchlist and SPARC's U.S. CEO, Matt McCran, if you want to know more about this. Now a couple more stories to take note. SPARC was recently approved as an authorized AUKUS user. That's a trilateral security partnership between Australia, the UK, and the US, which can allow the company to work with eligible US and UK defense partners without separate export permits. This could accelerate the integration of its Overwatch software into allied drone platforms. Also, earlier this month, SPARC launched a dedicated US federal and public safety team that's going to help drive adoption of its Overwatch platform across law enforcement, border security, search and rescue, disaster response, and other GPS-handled challenged missions, all while expanding relationships with government agencies and industry partners.
Okay, John, you mentioned Overwatch a couple of times. What is it exactly? Could you just tell us a little bit more about it?
Right. Overwatch is the heart of SPARC's tech operation, Trevor. It is a software platform that enables drones and autonomous systems to determine their position and locate targets even where and when GPS doesn't work. By using sensor data and advanced geolocation algorithms, instead of relying solely on satellite signals, Overwatch can actually help military, security, and public safety operators identify targets in very challenging environments.
Well, we're talking top returns this week. Has this bleeding-edge tech company struck a nerve with its investor community?
That's some colorful imagery there, Trevor. SPARC stock has actually risen over 400% since the year began, as of this recording. And compared to last year, it's climbed over 1,100%. Now, SPARC AI isn't even the only company delivering impressive returns. Trevor's going to tell us about another stock making waves in a completely different industry.
That's right, John. A company that stood out to me after perusing top returning North American stocks year over year is BFLY Network, ticker BFLY on the NYSE, market cap 2.52 billion US, an ultrasound company that has paired differentiated technology with improving financial results into a recipe for truly spectacular year-over-year returns.
Differentiation is a strong word, Trevor, and a long one. How does BFLY Technology earn this moniker?
For starters, the company is a pioneer, having commercialized its BFLY IQ, the world's first single-probe, whole-body, portable ultrasound device, which is now in its third generation. Additionally, the company has made it its mission to make ultrasound more accessible and affordable, positioning itself as a one-stop shop in the industry, integrating diagnostics, billing, analytics, AI, and education all onto a single platform. simplifying a process that previously required a supercomputer and a large, unwieldy ultrasound cart to a smartphone and a handheld device. Butterfly's value add, to my eyes, is readily apparent.
I can see that. Would you say this value add alignment is with the company's income statements, or is there a degree of speculation at play here?
A little bit of both, actually. On the one hand, Butterfly's financials since fiscal 2022 show a company that is no doubt getting healthier, growing revenue in tandem with adjusted EBITDA, which, from a shareholder value perspective, is a welcome sight. On the other hand, Butterfly's financial improvements have been in the form of reduced losses, not higher gains, making it appropriate for investors to risk adjust their positions according to their tolerance for holding consistently improving but still unprofitable companies. There's clearly some risk here, but it's diminished.